Howdy, folks. Welcome to Liberty Call. Today is Monday, July 1st, 2020. Oh, I hope you're having a fantastical day out there in the interwebs. Kind of a gloomy day here in Colorado. We haven't seen the sun much today, which is not too terrible because it's been quite warm the last week or two. But anyways, hope you had a good weekend. Astros played pretty good versus the Mets, took 2 of 3, and they are only 3.5 games out of first place. Woohoo! All right, and they're playing today right now up in Toronto. They're leading 1-0. So let's fingers crossed that they managed to pull this one out. All right. Well, if it is your first time watching Liberty Call, I'm glad you were here. Yes, very much. If you could do me a favor, give me some thumbs up, a like, share, subscribe, a follow, and press the notification bell. All right. Let's get into today's numbers. Dow Jones was up 0.13%, 50 points. Closed at 39,169. The S&P 500 was up 0.27%, 14 points. Closed at 5475. NASDAQ up 0.81%, 143 points, closed at 17,876. The VIX was down 1.77% today. It's at 1222. Canada down 0.3%, Brazil up 0.69%, and Mexico up 0.85%. In Europe, Germany was up 0.47%, the UK up 0.03%, France up 1.09%, Netherlands down 0.09%, Spain up 1.04%, Italy up 1.7%, Switzerland up 0.5%, and Portugal up 1.76%. Russian exchanges were split today. The MOEX up 0.99, the RTSI down 0.8. And the Asian markets, the Nikkei in Japan was up 0.12%, Australia down 0.22%, New Zealand up 0.19%. In China, the Shanghai was up 0.92%, the Shenzhen Component up 0.57%, China A50 up 0.34%, DJ Shanghai up 0.84%, Hang Seng up 0.03%. And the Taiwan weighted was up 0.11. Exciting stuff, I know. All right, so that is the markets for today. Things were kind of muted here domestically. Looking at the charts, they were just kind of hugging that flat line. Looks like the NASDAQ got a little bit of a rally at the end of the day. All right, let's get over to the weekly economic update for July 1st. Stocks finished last week of June and Q2 mixed as investors digested a fresh round of economic data. The S&P 500 slipped 0.08%, while the Dow Jones Industrial Average dipped also 0.08%. The tech-heavy NASDAQ Composite gained 0.24%, and internationals rose 0.27% through Thursday. NASDAQ regains the lead. Last week opened with the S&P 500 and NASDAQ heading lower with the Dow while the Dow rallied on momentum from the prior week. But by midweek, the leadership shifted with the NASDAQ pushing higher. With the back half of the week packed with fresh economic data, conflicting stories developed about the economy. New home sales fell 11.3% in May, the largest month-over-month drop in a year and a half, while the supply of new homes hit a 16-month high. Meanwhile, first quarter GDP revised slightly to 1.4% higher, and durable goods increased in May. Friday's personal consumption and expenditures data showed that core inflation slowed 0.1% in May over the prior month and 2.6% year over year, its lowest annual rate in 3 years. Both figures were in line with expectations. Stock prices initially rallied on the upbeat news, but the early gains faded as the trading day progressed. All right, divergent speakers. Federal Reserve officials have worked to communicate that despite the progress made on inflation in recent months, it remains above the Fed's 2% target. Last week, Fed Governor Michelle Bowman surprised the markets when she indicated, I remain willing to raise the target range for the federal funds rate at a future meeting should progress on inflation stall or even reverse. And I covered this a couple times last week, if I could step away from this, that the Fed, since they can't get inflation back down to 2 or lower, they're just going to raise their target up so that they're going to raise it from 2 to 4. That way, right now, where it's in the 3s, hey, we hit our goal. Great job, guys. It's like moving the goalposts around. All right. Economic data this week. Today on Monday, we have the ISM Manufacturing Index and construction spending. Tuesday, Fed Chair Jerome Powell speaks and motor vehicle sales and the JOLTS report. Wednesday is the jobless claims, international trade in goods and services, and the FOMC minutes. And Friday is the employment situation and the Fed's balance sheet. Just two major companies reporting earnings this week. Wednesday is Constellation Brands, and Friday is CalVista Pharmaceuticals. All right. Excellent stuff, folks. All right, let's bring up our market recap for today. S&P 500 rises as tech kicks off quarter two on front foot. I'm not sure why they call it H2. It's Q2 in my opinion. All right, on Monday, the S&P 500 rose, driven by tech stocks as the market began the second half of the year. Oh, yeah, probably half two. That's probably why it says that. The second half of the year positively, anticipating the monthly jobs report due later in the week. For the second quarter, the S&P 500 and NASDAQ Composite gained 3.9% and 8.3% respectively, while the Dow Jones Industrial Average dropped 1.7%. This week, investors are focused on labor market updates, including job openings report on Tuesday and the non-farm payrolls data for June on Friday. These reports will provide more insight into the labor market, a critical factor for the Federal Reserve's rate cut decisions. The Fed is expected to release the minutes of its June meeting, with Chairman Jerome Powell scheduled to speak at the European Central Bank's annual forum in Portugal on Tuesday. Ooh, I bet that's nice. Manufacturing data revealed that the U.S. manufacturing activity fell further into contraction in June, with a reading of 48.5, below the estimate of 49.2. In corporate news, Boeing saw a 2% stock increase after agreeing to purchase Spirit AeroSystems for $4.7 billion, boosting Spirit stock by 3.6%. NVIDIA remained flat despite intraday losses as Morgan Stanley raised its price target for the company, citing its strong position in the AI semiconductor market. Chewy dropped 5% following stock influencer Keith Gill's disclosure of a 6.6% stake, while GameStop fell 5.4% amid securities fraud allegations against Gill. Tesla jumped 6% ahead of its second quarter delivery report, with expectations of a near rebound in deliveries. NIO also rallied 6% after reporting a significant increase in EV deliveries, nearly doubling from the same period last year. Overall, the market remains cautiously optimistic, with upcoming economic data and corporate reports expected to provide further direction. Awesome stuff. All right, let's get into some manufacturing news. The June ISM Manufacturing Index report. This was published by Nate Guernsey from First Trust. All right, the ISM Manufacturing Index ended the first half of 2024 in a worse state than it began, falling deeper into contractionary territory at 48.5 in June, missing consensus expectations. The U.S. manufacturing sector has now contracted for 19 out of the last 20 months. The report's details revealed that only 8 of the 18 major manufacturing industries reported growth in June, while 9 reported contraction and 1 reported no change. Production softened in June, falling into contraction for the first time in 4 months. This index has hovered around 50 since the Federal Reserve began its current tightening cycle in early 2022. The new orders index, another forward-looking component, has been at below 50 for 20 out of the last 22 months, indicating persistent weakening demand. Companies responded by reducing their order backlog, with that index declining to 41.7 in June, marking 21 consecutive months of contraction. Manufacturing company surveys comments highlighted dwindling backlogs and increasing furloughs, reflecting in the employment index, which fell back into contraction for the 8th time in the last 9 months. The broader economic context shows that goods-related activity was artificially boosted during the COVID-19 lockdowns. However, as the economy reopened, consumers shifted their spending back to services from goods. The ISM index peaked in March of 2021, the last month federal stimulus checks were issued, and has weakened since. Continued manufacturing weakness is expected in the second half of 2024 as economic repercussions of COVID-era spending come due. In related news, construction spending declined by 0.1% in May. Decreases in home building, office projects, and power facilities outweighed an increase in manufacturing facilities, reflecting broader economic adjustments and challenges in the construction sector. Well, that's some positive news, isn't it, folks? Yeah. All right, and some more good news. This comes from Zero Hedge. This article is titled, "Wait, how much have groceries gone up?" And this comes from Jeffrey Tucker of the Epoch Times. All right. In a recent CNN debate between President Joe Biden and former President Donald Trump, moderator Jake Tapper asserted that grocery prices have risen by 20% since Biden took office. This claim, which aligns with the data from the Bureau of Labor Statistics and the Federal Reserve, left many viewers skeptical, as it contrasts sharply with their personal experiences. I know it has with mine. Many consumers report far higher increases in grocery bills, leading to widespread disbelief and confusion about the true state of inflation. The Bureau of Labor Statistics reports a precise increase of 20.8% in grocery prices. However, anecdotal evidence from consumers suggests much steeper rises. A viral video demonstrating a 185% increase in cost of 45 grocery items over 2 years highlighted a significant discrepancy between official statistics and real-world experiences. This example shows that while official data points to a 20.8% rise, many people feel the impact of much higher inflation in their daily lives. And what they're talking about there was a guy, I saw this over the weekend, where he had bought 45 items on Amazon 2 years ago, and I guess it'll say, do you want to reorder whatever? So I guess he figured, hey, let me go in and reprice everything. And if I did this exact same order today, how much would it be? Or if from those prices back then versus today. And I believe the first one, 2 years ago was like $180 or whatever. And then this time it was like $400. So that's where that, 185% increase comes from. So, the BLS and all these government agencies, they massage the numbers to make it look as good as possible based upon who's in office. All right. Several factors contribute to this gap between reported and experienced inflation. The phenomenon of shrinkflation, where product sizes decrease while prices remain the same, is not fully captured in traditional inflation measures. Consumers also substitute higher price items with cheaper alternatives, such as switching from beef to chicken or shopping at discount stores instead of premium outlets. These changes in consumer behavior are challenging for the BLS to track accurately. Additionally, the Bureau of Economic Analysis calculates the Personal Consumption Expenditures Price Index, which the Federal Reserve prefers over the Consumer Price Index. The PCE includes a broader set of goods and services and uses data from businesses and trade organizations, contributing to differences in inflation measures. The PCE reported only a 0.2% increase in May, annualized at 2.4%, and a 3-year increase of 16%, which seems disconnected from consumers' perceptions of inflation. The complexity of these calculations and reliance on different data sources create discrepancies that challenge the accuracy of official inflation measures. Despite this, Wall Street closely monitors these statistics because they influence Federal Reserve policy. Lower reported inflation rates can signal potential interest rate cuts, which are favorable for financial markets, causing stock prices to rise. This situation underscores a significant disconnect between inflation data and lived experiences of the consumers. Traditional methods of calculating inflation may be outdated and unable to capture real impact of price changes on consumers. The article suggests that individuals examine their own receipts to better understand how inflation affects their personal finances rather than relying solely on potentially misleading official statistics. In conclusion, while the BLS and Bureau of Economic Analysis provide essential data, their reports may not fully reflect the inflation experienced by consumers. This discrepancy raises questions about the effectiveness of current inflation measurement methods and highlights the need for individuals to critically assess their own financial experiences. The debate between official data and personal experience continues, with many advocating for a more nuanced and comprehensive approach to understanding inflation. Yep, so moral of the story is everything's more expensive. So awesome. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information's there. If you need help getting your financial crap back together, give me a buzz, shoot me an email. I'll be happy to help. All right. Well, that's, like I said, everything I had for today. Astros appear to still be winning at the moment. So let's, again, fingers crossed that they can get through the 9th inning without screwing this up. So hope everyone has a fantastical evening, and I shall talk to you again next time. Adios.